Hello everyone, welcome to Global Academy again. I am Vineet. If you remember in my last video, I told you that my next videos will cover the international accounting standards. So guys, from this video I will start covering the international accounting standards, and today we will cover IAS 2 inventories. Guys, before we study any international accounting standard, we should know that what is its scope, what is its scope and what it covers. So guys, you can see its scope is inventories. What it covers? It covers inventories, its cost, how it is recognized and de-recognized. Right guys? Now, let's start the main topic, inventories. What inventories are? I will say that inventories are the things which are available for the production process if I am a producer, or available for sale if I am a trader. I am purchasing goods from the wholesaler and selling. Then inventories which are available for sale and available to be used in providing services. If I am a service provider, see this marker, I'm using it to provide service, right? Every inventory, everything which I will used for trading, to deal or to provide goods, to produce goods or to provide services are my inventories. If I am dealing in furniture, so furniture which I purchase to sell, not to use, right? So the furniture which I purchase to sell is my inventory, right guys? Now, I will classify inventories in three categories. The first is raw material. Raw material which is available to be used in production process. If I want to produce goods, I need raw material, right? Now, the second is WIP, which we call work in progress. That means available but incomplete. I have started the production process with my raw material, but the point when I am trying to look for it, at that point of time, my raw material is neither finished nor, again, it's a raw material because I have started producing it, right? I am starting the processing. I've used it in production process. Now it is no more the raw material, neither the finished goods. It is in between the raw material and finished goods. So I will call it work in progress, right guys? Now, the last is finished goods. Now, my raw material is processed. A point of time it was work in progress. Now it is finished. It has been converted into the finished goods. Right? Now, finished goods again available for sale or to be used in providing services. right guys? So guys, as we have seen, inventories are classified in three categories: raw material, work in progress, and finished good. Now, if we talk about IAS 2, IAS 2 deals with valuation of inventory of finished goods, right guys? It deals with the valuation of inventory of finished goods. What it says closing inventory of finished goods is valued at cost or NRV. What is NRV? NRV is net realizable value, whichever is less. What is cost here? Cost is nothing but we have done a statement of profit loss where we were calculating cost of sales or cost of goods sold, right? This is nothing but cost. And NIV is selling price minus expenses which are necessary to sell the goods, which we have to incur some expenses, right? Some paperwork, some transportation. Sometimes when you go and buy furniture, what that says, transportation is free of cost from our side, guys, right? So some expenses which are compulsory to sell the goods, we subtract those expenses out of selling price, we get NRV. So we will get an amount here, an amount here. Whichever is less will be the value of closing inventory, which we will record in the statement of financial position and statement of profit or loss, everywhere you can say, right guys? Now, if I am a manufacturer, say suppose I am a manufacturer, I am producing goods. So what will be the cost for me? The cost for me will be the cost of raw material, right? Cost of direct labor, cost of, we can say, variable overheads, cost of fixed overheads, some contractual cost. What are these contractual costs? See, suppose I am again a manufacturer of furniture. Now I am making a table, a central table, a coffee table. Wood, wooden work I am doing. I am making it, giving it a shape. Everything I am doing with wood, which I can do. But it has a glass top. I am not making glass, right? So what I will do is I will give contract to some other one, so to some external party. It will provide me with glass, right, guys? So the cost which I will pay to that vendor who will provide me the glass will be my contractual cost. And in some cases, we have some other costs. If you remember, when I was doing journal entries, I told you that whenever I purchase anything, the cost incurred while purchasing, like transportation, etc., will be added to cost. If I have added already, it's fine. But in case I have not added that cost to my raw material, or when anything I purchase, I have not added that cost to my purchasing price, then I will include those expenses with other costs, right? And about the direct labor, variable cost, fixed cost, I will make a video in which I will tell you everything about cost allocation. For now, we should know that these are the elements which will make the cost for me if I am a manufacturer, right guys? Now we have to see that how to determine cost or value of inventory. Now, we all know that we have inventory valuation system. I hope we all know about inventory valuation system. I will make a video for this also, guys, so that you can know about it. It says that we have two methods of valuation of inventory. One is periodic and one is perpetual system. We have two systems. For this, I will make a video individually. But what IAS2 says, IAS2 says that we have to focus on the methods of valuation of inventory. It says that we have to focus on FIFO. FIFO says first in, first out. And second is AVCO. AVCO says average costing. IAS2 says that we have to focus on these two methods for the valuation of inventory. These are systems, right guys, which I will tell you in my video. And these are methods. IAS2 focus on the usage of these two methods. There is one more method which is LIFO. LIFO says last in, first out. IAS2 does not recommend this method. So what we have to consider is that IAS2 focus on the usage of FIFO and AVCO for the valuation of inventory. It does not recommend the use of LIFO, which is last in, first out. Right, guys? So, guys, we have some disclosure requirements for this IAS2. Let us go through those. Pure theory, so I have written already before so that we can save time. IAS2 says that we have to disclose the accounting policies which are used to measure the cost of inventories. Number one. Number two, the financial statements should disclose the total carrying value of inventories and their classification. Financial statements should disclose inventories at fair value minus cost to sell. It should disclose the amount of inventory disclosed as expense during the year. Any value of inventory written down during the year or reversal of any written down value of inventory should be disclosed with the reason that why we have written down the value of inventory. Guys, when we invest in inventories, when we buy inventories, initially they are recognized as assets until they are sold. But when they are sold, they are de-recognized as assets and recognized as expenses in cost of goods sold. Right, guys? And financial statements should also disclose any amount of inventories pledged for any collaterals. Right, guys? So now what we'll do is we will just do a small question, small example, so that we can understand properly the usage of valuation, how we value actually what we said, that we have to value inventories as at cost or NRV, whichever is less. I have taken three inventories. I have 2000 units of A, 25 of B, and 3000 of C. Selling price per unit is given, expenses which are necessary to sell are given, and cost per unit is given. Let us see how we do the valuation. First of all, let's see the selling price. We have selling price 20 here, 25 here, and 30 here for ABC. And the expenses which are essential to be made before selling are $1 total. I'll take total, right? $1 for A, $5 for B, and $4 for C. I will subtract these expenses and I will get NRV. Here it is 19, here it is 20, and here it is 26. Now the cost is given to us 18, 21, and 26. Now what value we will take for our inventories? For A, you can see whichever is less of 2. In first case, cost is less, so value is cost. And for second case, NRV is less, so it will be valued at NRV. And for the third case, both are same. I will take any value, 26. So I will value my inventories at 18 per unit, 20 per unit, and 26 per unit for A, B, and C. This is how we'll value the inventories as per IAS 2. So guys, I hope we have covered everything which is needed to know the IAS 2, the theory part, the disclosure, the definitions, the disclosure parts. Still, if you have any doubts, if you want to ask anything, you can leave comment on my channel. I will definitely address your comments, your doubts. So guys, stay tuned for my next video in which I will come for with the next IAS. Bye bye, take care.